Medical Properties Trust, MPW. I think the big question on everyone's mind is whether or not a dividend cut here is imminent. What is going on with this company? Is it going to remain strong, or is it looking at a dividend collapse and a share price collapse? So stick with me to the end. I'm going to look through some of the major concerns as well as some of the news that's been hitting the stock hard in the recent weeks. At the end, I'll let you know what I think. I am in the Koipin platform. I am using this to get a good feel for what's going on with the companies. And they've got an absolutely fantastic and comprehensive overview, both company financial data as well as wider macroeconomic data. Now, one of the beautiful things about them is they have access to a lot of the key information and news here. I am down in MPW looking through the news filings and transcripts, and I just want to have a look here. Now, I've looked for Dividend, and this was the recent earnings call from 2 weeks ago on August the 8th. Now, one of the big questions from the analysts is looking at the current dividend and looking at the FFO guidance. The analyst is really asking about the overall sustainability of the dividend. Now, the reply is that essentially everything is on the table. And that's at the board level. So the board is constantly evaluating, constantly looking at liquidity opportunities, and everything is on the table. So they're absolutely not ruling out a dividend cut. They're not standing behind the dividend strongly. And I think that's really important to note. Now, when we begin to come back and look at this, we can begin to see a couple of key things here. When we begin to look at the actuals consensus values, we can see the big cut here in 2023 of the sales here of about 10%, which is quite a considerable cut. And that's flowing through to a lot of the challenges that they're having at the moment. Now, Koifin's also just added in this price target fairly recently, which is absolutely fantastic, and it gives us the overall analyst ratings here. Now, we can begin to see that the analysts have been overall shifting from strong buys through to holds in general, and we can see in white here this average analyst consensus price target has been decreasing quite strongly, and that sort of reflects or is mirrored by the price. Now, the price has also been hugging the low levels here for the price targets, the low price targets, quite closely, and we can see it's very much been on a downwards trajectory here. Now, if we look here, I think this is a useful piece of information here as well. We were looking at the price target and the percentage difference between the prices and the average targets, and we can see here that if this was a good time to buy, we're looking at an increase of 50% from the current price of the stock through to the average price target. So we can sort of say that on average, this looks like it could be a good time to buy if, and this is the key thing, if there was nothing else going on. When we begin to get into this, what is it that's going on? So we're going to turn back to the news here. Now, this is drawing from a range of different sources such as Seeking Alpha, Newswire, and Yahoo Finance. And I think some of the key things here to do will be to go through some of these key items. So when we click through here, we see that there's been a Wall Street Journal article, and MPW is claiming that it was false and misleading and that the writer has ignored really important elements here. But the key element here is news released on Friday, August the 18th. Now, one of the market concerns around Medical Properties Trust has always been that they have over-focused on some of their biggest tenants. So here, there's some concerns there that the third largest tenant has been financially supported, and yet this was ordered to be put on hold by a California state regulator. Now, what that could mean is if the state regulator is blocking Medical Properties Trust from taking a stake in the overall Prospect's business, their third largest tenant, this could actually put Prospect into dire financial straits, and that's one of the big challenges here. Now, it's also noted that Prospect has been dealing with some challenges at present and wasn't able to provide any timely feedback here. Now, one of the things that I think is important to note is the dividend has been growing. And the dividend has been growing since they cut in the global financial crisis up until recently, where the dividend has stagnated at 29 cents a quarter. And the big question is whether or not they can actually afford to cover this dividend at this rate. This is a nice platform for some of the visual representations, and it also pulls in the AFFO and FFO data. So for the REITs, these are essentially the same as the earnings for a regular company. Now, what we can see here over time is Medical Properties Trust has fluctuated wildly. This white line here is the dividend level, and this orange line here is the AFFO, the adjusted funds from operation, which is very much like the cash available for distribution. Now, as we can see, usually they've been quite close together, which is what we normally see with REITs, but we can see here in light green the forecasted 2023, 24, and 25 results indicate that they are going to be very closely connected, which is a bit concerning when you're thinking about the overall dividend security and the dividend payouts. Another important thing to note here as well is generally the analyst scorecard is not too bad, but it's also not as good as I would like to see. Now, if we begin to look at the forecasting calculators going forward for MPW, if they were to return to their usual 15 times multiple, we would be talking about a total rate of return of about 200% from where they are now, or about 60% per annum until the end of 2025. Now, part of the difficulty here is, as we can see down here in the lower panel, we can begin to see 6 months ago the analyst estimates for AFFO compared to the analyst estimates today. And so we can see a reasonable decrease here of 14 cents. That's about a 10% drop over the AFFO, and an even more substantial drop here for the 2024 year for the estimates, and a slight drop here for the 2025 estimates. What that means is it means that this blue line here, this AFFO level, has been pulled downwards towards the dividend payout. Now that leaves us here with dividend payouts estimated to be about 95%. Now, one of the big questions is whether or not this is sustainable given everything that's going on. Now, all it would take would be one or two tenants, or all it would take would be a couple of deferrals for rent payments, and it's going to put some serious pressure on the ability for this REIT to pay out these dividends. One of the interesting things about this company as well is a very high level of short interest at the moment. So we're talking about a 20% short interest. That is a very high level. And we can see a very large sell-off here, and it just keeps on increasing. Now, in my opinion, there are definitely more secure REITs out there, and if you're looking for a good long-term stable play, this is not that. Medical Properties Trust, I would say, is a very speculative buy right now. I anticipate that there's going to be a dividend cut. I'm not sure that the company can avoid it at this point, particularly if we tip into a recession. If there is a dividend cut, I would expect to see these levels plummet even further. Now, by way of example, Algonquin Power and Utilities had a dividend cut here, and we can see the big decrease here from about $11 a share down to $7.50 within a matter of days. And that is what I think might be on the cards for MPW. Now, probably the most important thing to note for MPW is I think that's already largely baked into the prices at this point based on these large decreases here. If the dividend cut is announced, I suspect it won't go down very far, and the dividend yield at the moment is also very high already at about 17%, which again is really indicative of the fact that we are likely to see a cut in the dividend that will begin to normalise us probably down to the 7 or 8%, which I would suggest would probably be a 50% dividend cut. Now, the beauty about the dividend cut as well, if it does happen, is it's going to enable them to look at this total debt and begin to reduce this total debt level down to a much more manageable level fairly quickly. They're not, however, in a situation where they have a huge amount of debt coming that is going to be maturing in the near future. They've done a good job of selling off some of the Australian assets, and they've done also a good job of using that to retire a big chunk of debt. Now, the challenge, of course, of selling an asset to retire the debt, like this platform, use the link in the description to subscribe to KoiFin and I receive a small affiliate payment that supports this channel, is you don't then have the asset to continue to pay the high level of dividends at the same level that you've been using, because you've lost that income, you've lost that revenue coming in, and it can't be used to pay those dividends. And this, I think, is going to be one of the key things with Medical Properties Trust. What do you think? Is this in your watch list at the moment? Now, of course, there are some competitors here, and I would say many of these would also be very nice options as well instead of Medical Properties Trust.